If 35% are based on utilization, that's going to be our number one area to focus. The second biggest area is on our payment history. Do we pay on time? That's 30% of our score. And so those two areas alone, out of the 5 different criteria, are 65% of the total credit score.
Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. Go to AskTheMoneyNerds.com because we're going to answer questions. And we've got some questions on credit, right? The right credit score will save you interest, but it'll also save you on your insurance costs. Did you know that? Car insurance, homeowners insurance, they might be looking at your credit score. So this can make a difference for you so you can keep more of what you make, pay the institutions less, maybe enjoy life a little bit more. Stolba?
We're all
Timmy,
about that.
Let's do this.
Yes.
Enjoying our lives more every day.
Absolutely.
I like your jacket. It's a good looking jacket.
Thanks.
This is my mountain man shirt if I was a gangster.
Your bougie mountain shirt. Is that what that is? Yeah. I don't know all the language that the kids are using
Italy,
these days.
I pretend to be an Italian. When I'm at the mountain, I pretend to be a mountain man.
Mountain man.
Like, yeah, I'm either decked out or totally platted out. One of the two.
Yeah, I like it. Okay, so we're going to dive into credit. So we have 2 questions that we're going to tie together into one. The first one is from Jose. How do I fix my credit? So
let's let Tim start with this.
Okay.
Great.
Because like Garrett said, your credit score does influence interest rates for cars, for insurance. And so it's really important to have a healthy credit score. So if someone has something that's below a 760, what do they go about doing to build that up?
Sure. First, they got to understand how credit is actually calculated, what matters, what doesn't matter in your credit. And it doesn't make sense what matters and what doesn't matter. So what you have to understand, so 35% of your credit score is going to be based on utilization rates. So utilization rates are confusing for a lot of people because they might say, well, I pay off my credit card every single month. And they're not worried about how much you pay off every single month. They're worried about out of your available credit, how much are you using? So if you have a $10,000 credit limit on your card and you use $4,000 every single month, but you pay it off, if the credit card company checks in and they see the $4,000 balance, they're going to say you're using 40% of your credit. There's 2 numbers to keep in mind. 30%, if you're using more than 30%, it's going to hurt you. If you get it down to about 10%, it's going to help you. So kind of in that range between 10 and 30 doesn't hurt, doesn't really help, but you're not going to get, it's not going to penalize you. Since it's worth 35% of your credit score, that's about 300 of the 850 points. So that's the first place to look is where are your utilization rates at currently and what can you do to improve those? So a couple ways to improve those. You can call the credit card company and say, I'd like you to give me a higher credit limit without pulling my credit score.
Just make sure you're not going to spend all that money.
Exactly. Don't spend it though, right?
Yeah.
You have to just get the limit.
Be disciplined enough not to go that far. Yeah.
This show's for big boys and girls.
Exactly.
not for,
Exactly.
Cool. That's free money.
I know. Yeah. Don't turn a $10,000 card into a $15,000 card and turn a $4,000 spending habit into a $9,000 spending habit, right?
Yeah.
So yeah, definitely you can do that. The other thing is, coming up into a loan, if they won't extend your credit, you can try paying off the card faster each month or earlier. So maybe you're making 2 payments a month instead of 1 or 4 payments a month instead of 1. It'll never let your balance get very high. And now your score can boost up, which might let you refinance something else to fix that money crunch and get that credit limit extended. 30% of your credit score then will be based on your payment history. So have you missed any payments? And a couple guidelines to keep in mind. These are just basic guidelines, but if you have a 30-day late, it's going to hurt your credit score for about 9 months. So
that's a long period of time for one missed payment
People
or
have
one late payment
over that time.
Yeah,
that's true.
So if you
long gestation period,
and then if you're 60 days late, that can hurt your credit score for 2 to 3 years.
How many days late?
60.
Okay.
If you're 90 days late, that can actually affect your credit score negatively for 5 to 7 years.
Wow.
Because they show that if you're 90 days late, your chance of a complete default is over 95%. So they look at that as kind of the worst level. If you're 90 days late, it's pretty bad. So if you're going to be late on a payment, call the creditor before you're late. Let them know the situation. Try and work out something that you can do to kind of stop that. That's 30% of your credit is whether or not you've ever paid late. Mm-hmm. If you've paid late and you honestly paid late, it's going to take some time to get that cleaned up, right? And then you've got a few other categories. There's credit blend. So do you have multiple types of credit? So like a revolving line, an installment loan, that kind of thing will influence your credit score at about 15%, I believe, for that one. You're going to have 10% of your credit score going to be based on inquiries. So how many times does a creditor pull your credit to see if they can give you more credit or a new loan, right? So just keep those to a minimum. Don't let anyone pull your credit. You'll walk into different stores, different car dealerships. They'll pull your credit so fast. It's crazy. So
especially when you were me in my 20s.
Yeah.
And I was in my Kurt Cobain phase. Long hair still.
I would have liked to have known you then.
Hoop earrings. Bleach blonde hair.
it was a great phase. It was amazing.
Yeah, you knew each
Like,
other
this
then.
guy can't afford a car.
We got to find some pictures from back then. I got to see this.
Probably some floating around, I'm sure. And so, keep those to a minimum, right? Only let someone pull your credit if you're really going to seriously get that loan. Otherwise, tell them you can't pull my credit.
So if someone calls their credit card company and says, I have a $10,000 balance, would you consider increasing it to $15,000? Do they check your credit again at that point since you already have a standing
Sometimes.
relationship with them?
They can. So you need to let them know up front, I don't want you to pull my credit.
Okay.
And the first person you call is a telemarketer, most likely, kind of entry level. They're not going to be able to make that decision. So you usually need to ask for somebody in a different department. Politely escalate the call. I always say escalate the call, but then that sounds like you're getting angry and yelling. Don't do that. You know.
When you yell, does it sound like yelling, or is it still the same soft Tim voice?
It's the same soft Tim voice.
When I'm talking, I sound like I'm yelling. So we're like the opposite. Yeah.
Exactly. We are the opposite that way. So they're going to want to, politely escalate the call to a different department, and ask for that limit increase without a pull of the credit, right? And then the final thing that they're going to base your credit on is your overall length of credit history. And there's payment history and then length of history. So I think this plays into another question that you said we got in about credit cards, right?
So if you cancel them after you pay them off.
Yeah.
Yeah. So that question comes in from Vernon, and it says, should I close my credit card account after I pay it off? If I'm trying to clean up my credit report.
On a count of three, everybody give your answer. 1, 2, 3.
No.
Right.
Sweet.
When they're looking at your credit history.
That's pretty emphatic, by the way. Good job. You knew you were answering it right, so you really put a stamp on that.
Had a high level of confidence in that answer.
A lot of conviction. So when you have credit history, they're going to look at your total length of credit history. So when did you first get credit history? And then the second thing they're going to look at is what's the average length of your current open credit history. So when you cancel that card, it's going to shorten that average length every single time. And so you don't want to close a card. If you don't want to use the card anymore, shred it, put it in your safe or something, but just leave it open for as long as it'll be open.
Sometimes it's good to use every quarter.
Yeah.
Just charge something, pay it off immediately. You don't need to pay interest, but.
Exactly. Yeah. If you want to keep your cards active, that's the great way to do it.
Yeah.
So for the first question, as far as how do I clean up my credit, really, if you understand how it's built, now you can look at his credit report and say, okay, well, my utilization rates are off. So if you fix those, you're going to get a big boost because that's 35% of your score.
Yeah.
If you've missed payments in the past, you can call those companies, try and negotiate, see if there's a way to get that off of your credit score. That's 30% of your score, right? And then other than that, limit your inquiries, don't close cards. We had a lady that I don't know how she did this. She ended up with like 30 credit cards, some of those department stores cards. It was crazy.
Same as 90 days, same as cash,
Yep.
Those little like, hey, get 20% off of your first purchase. I remember I was really tired and I was shopping with my wife and she was buying something and I wasn't paying attention. But then all of a sudden I realized the questions they were asking, they were actually applying her for a credit card to get some discount. I'm like, wait. Are you putting her on for a credit card? They're like, yeah. I'm like, we don't want a credit card. But I just like, it was so subtle. Mm-hmm. So you have to be really mindful of that.
Yeah.
And, back to school shopping for the kids, that can be a big, bill that day. And they're like, you want 30% off? And so a lot of people will jump at that. And that's
But 30% savings on one purchase isn't as effective as getting a great interest rate on a mortgage.
Exactly.
Or being able to buy a business with the best credit score that gets you the best terms.
Or getting a better car insurance policy.
Right.
Because you have good
We want
credit.
the big things, not the small things
Exactly.
here. And man, I actually learned from what you're saying here. So I'm glad I just gave you the floor. Great work, Timmy. But I would say check for errors.
Yes.
Yeah.
Yep. That's the other thing. Because if any of those areas have an error in them, it's negatively impacting your score.
Yeah. If
Is
you're
that
Amanda Stolba Jr., then you probably have Amanda Stolba Senior stuff show up on your credit.
Yeah.
If you're Timothy Carden the 7th, then you might have something from the 6th or the 5th that shows up. Those are very common.
Yep.
But also, just I've had credit lines on one of my, bureaus that's not on the other two.
Yep.
So it's like, oh, that's one of the things that you can look for and go, or a different address because you've updated your address, which one of the tricks is just always have a PO box. So even if you move, it's not being switched all the time. And you can always forward things.
So when people are looking to review like errors on their credit reports, is that something that they should do annually? Like pull from all 3 companies and do it once a year, or how frequently?
Yeah, I think you need to keep an eye at least on your credit score somewhat regularly, because if you notice that it's not where it should be, then you need to be pulling the report to see what's going on.
When you're over 800, who cares?
Yeah.
Just brag. Just tell people I'm over 800. It's like on your resume.
You just get it tattooed on your head.
I should have put that on mine.
She likes to talk about it. I'm not.
Yeah. So, and you get a free credit report from each bureau at least once every 12 months. So if you really have a tough credit situation, you could actually pull from Equifax. 3 months later, pull from Experian. 3 months later, pull from TransUnion. 3 months later, you can get a new one from Equifax again because it's been a year. So you could actually do it. You could do it that way.
I like that strategy, Timmy.
Right?
He's a money nerd.
And so if you really need to be keeping an eye because you've had some major issues, you can get one every quarter by just doing one per bureau.
That's a great plan.
Right? Now, the score you typically have to pay for.
You look like you're really impressed with Tim. I've never seen you be that impressed with something I've said.
It's so simple. Oh, you're right.
And so that's a way for you to get a report every quarter if you need one. And then other than that, keep a good eye on your score. Have a way to know what your score is, because if you all of a sudden see a big drop, there's something you need to look at and pay attention to. A couple of things to keep in mind too. They'll always try and scare us saying that credit fraud is the number one, like fastest growing crime. But the way they usually say it is it's the fastest growing reported crime. And the reason they say it that way is because what happens to most of us is it's inaccurate merging of our credit files. So like Garrett mentioned, similar name to somebody else. If you have the same 5 digits of a social security number as somebody else, even if they're not in the same order, you can potentially have your files merged. Juniors and things will have it happen. Similar addresses. So you can look on your credit report, see something that's not you, it's an error, and you think, man, somebody tried to steal my credit. Well, the way that it works is when I go and say I want my report, the algorithm says, well, this is not Tim, this is not Tim, this is not Tim, this is not Tim. Here's everything we can't prove is not Tim. So if someone has something very similar to me, then I can get their stuff on my report. So I've done some business transactions with my brother in the past, so it's not uncommon for me to have his stuff on my report. My middle name is the same as my dad's first name, so it's not uncommon for me to have some of his stuff on my report. So you have to pay attention to those things. And so once when I was younger, my dad's stuff on my credit report made me look awesome, so I left it there.
Sweet.
I don't think I'm going to repeat that.
Correcting this error, right?
So once someone identifies that they do have an error, what do they do about it?
Okay, a couple things to keep in mind. If it's a minor error, then you can go ahead and click on the thing on the computer to make your dispute. If it's a pretty significant error, what you have to keep in mind is when you click I want to dispute online, they're going to make you agree to their terms and conditions. Usually when you agree to their terms and conditions, you're giving up some of your rights under the Fair Credit Reporting Act.
Read the fine print, people.
Don't read the fine print, just don't do it.
Okay.
You can read the fine print, it just takes hours, right? It's always like this huge thing that no one reads, they just click it. So just keep that in mind. When you need to dispute something, don't just do the online dispute. A lot of times you give up your rights. You don't want to do that. So instead, you're going to have to do the snail mail situation, right? You're going to
certified.
Certified letter.
Okay.
A lot of times it's important to get certified plus a return receipt.
No more than 3 things disputed at a time.
Yes. Yep. You dispute more than 3 at a time.
You're frivolous.
Is it common to have more than 3 mistakes?
It can be. Usually they're minor. So there might be a couple major mistakes, and then the other ones will be like incorrect addresses. That doesn't hurt really bad. It does make you look transient to a lender, so that could be concerning. So you want to fix it, but if you've got 2 pretty important errors, and
Fix
then
those first.
Fix those first, then worry about incorrect names or incorrect addresses or things like that.
Once you understand how this game works, it's not a game that's logical a lot of times. It's not something that's self-evident. But once you know it and you kind of get the cheat sheet, by the way, this is illegal cheating. It's just simply knowing what to do so that you can improve your credit to the highest amount. And when it gets above 780, all of a sudden you have a lot more at your fingertips. You have a lot better situation for your life. So I've got Tim Absolutely Carden. Tim Absolutely Carden, he'll say absolutely at least once, if not 10 times during this. So you'll be absolutely in the know when it comes to your credit score. So Tim, let's talk about this. Let's go through just some basic things people can look at to boost their credit score, because if they don't have a good credit score, they're going to pay more in interest, or they're going to get denied a loan. There's people with errors out there. There's simple things that we could do, because the first time I learned about it, I was doing my radio show that I had way back in the day, and this guy Phil Tyrone's teaching me, and I'm texting my wife while I'm on the radio with all the tips, and we got, I think it was like 79-point increase over 30 days. So that's what I'm hoping to do is jump your credit, improve your cash, and your overall finances.
And I was listening to your radio show that day when I was running my real estate company up in Idaho. I heard Phil, and so I called Phil after the radio show and did the exact same thing, boosted my credit very quickly, and gained an understanding of how that system even works.
Yeah.
Warren Buffett said in an article a couple years ago, if he doesn't have $20 billion in cash, he's uncomfortable. And yet someone...
That's how I feel too, you know, I mean...
Me too. I'm just uncomfortable all the time. And so you think about the billionaire who probably has the most cash on hand at any given time is probably Warren Buffett. Everyone else has it in the equity of their business. But if somebody tried to create a fake profile mimicking Warren Buffett and run it through the algorithms at the credit bureaus, and it came out with a 580 credit score.
Really?
And so if you were basically, all you saw is Warren Buffett, is his credit score, and he went in to apply for a loan, they would deny it or do a crazy high interest rate, make him collateralize a bunch of things. I mean, it'd be nuts for him to get a loan. And yet he's probably the person in America that could pay off any loan at any given time,
right.
You know, no matter what.
Yeah, but our mutual friend and my registered investment advisor, Ryan, he had a client that's basically trying to get this loan. This guy's a multi-millionaire. He's putting down 50% on this home that he's buying, but he hadn't used his credit in over 10 years. He gets denied the loan because of utilization. So this is a game that's important to understand so you have access to money.
Yeah, and so the two biggest areas of what your credit is actually calculated based upon. The first one is called your utilization rate. It's worth 35% of your total credit score. So out of the 850 points, it's like 298 of them are based just on utilization.
Let me just tell you, if you're over 800, you're just bragging. I'm not over 800. My wife is, and she likes to remind me that she's over 800. I'm like, great. And?
Yes. But since you're over 780, you're still getting the best rates even though you're not over 800.
Yeah.
Right? So
that's why I let her know. It's useless points. It doesn't matter.
Useless points, yeah. Right? Yeah. So if 35% are based on utilization, that's going to be our number one area to focus. The second biggest area is on our payment history. Do we pay on time? That's 30% of our score. And so those two areas alone, out of the 5 different criteria, are 65% of the total credit score. Then we've got things like credit blend. Do we have different types of loans? So do we have an installment loan? Do we have a mortgage? Do we have...
Installment loan would be like a car loan or a signature loan on like maybe even a piece of jewelry that has a finite period of time that you pay back that you can't just go borrow more at any time.
Yep.
Revolving loans would be like a line of credit against a home or a credit card where you can pay it down and charge it back up.
Yep, and they want to see that you have different types of credit so you can use different types of credit appropriately. Then there's inquiries, which is the number of times a creditor pulls your credit. So someone that's investigating you on whether or not they're going to give you a loan, if they pull your credit, that's a bad thing for you.
Yeah, that's known as a hard inquiry when they do it. When you do it, it's a soft inquiry, meaning you're going to Credit Karma or Annual Credit Report or some service like that, and you're checking your credit score. You can do that obsessively, compulsively, and be fine. But when I went to buy my first car, I looked a lot like this, but it was more my Kurt Cobain phase. I did have hoop earrings. I did have blondish, kind of dyed long hair. And when I walked into the dealerships, I went into a Lexus dealership, an Infiniti dealership, and I ended up buying an Acura. They all checked really quickly, like, is this even worth our time to talk to this jackass? And so, you know, they pulled my credit so much it actually dinged my score.
Absolutely. We want to stick mostly to one hard inquiry a year if we can. So try and plan that out. They do give us some shopping windows on inquiries. So if I'm shopping for a mortgage, I can go out and actually have like 3 different lenders pull my credit within a 30-day window and have it only count as one inquiry.
Right.
So just try and plan that out
like
a little
if
bit.
You want to apply for multiple credit cards, because somewhere between 3 to 5 credit cards can actually help you optimize your score. You can apply for all those in the same day.
Absolutely.
And only shows one inquiry.
Yep.
Yeah.
And I think they give us about a two-week window for car loans and credit cards.
Yeah.
Where we can say, hey, these are all just one, right? So that's something to keep in mind, and that'll really help out on the 3 to 5 credit cards, jumping back to the utilization rate.
Well, and even like when I open up a bank account, I open it up at the bank I'm already dealing with, so all the time I'll say, hey, can we get this account without pulling my credit because I have a history here, and they say yes, and they do that. So you could be deliberate and mindful about that. And if I haven't got a loan for a car for a long time, but if I were, I always go in and say, hey, let's just assume I'm paying cash. Like, I don't want them pulling anything or looking at any report without my permission.
Yeah, and I usually clarify that up front with them. Mm-hmm. I just walk in, you do not have permission to pull my credit yet, and then go through the negotiation process and say, based on me having this credit score, what would this look like? And then when I'm ready to do the loan, let them pull it because they're going to need it for their file.
Yeah.
But yeah, like you mentioned, they're so fast at pulling your credit. As soon as
What's
they
that,
start,
like 10% of your overall score is inquiries?
10% is inquiries. So it's
Yeah,
not
so
a
it's
huge
not the
impact,
biggest thing, but
it can hurt.
right. We obviously know if you pay on time, that makes a big difference. But let's look at just a few tips that are going to help them boost the score.
Perfect. So if utilization rate is the biggest impact, that's going to be the first area we're going to go to improve our credit score. So what utilization rate is how much total credit is available to us. So I might have 5 credit cards, $10,000 of limit on each card. That's a total of $50,000 of credit I can go out and borrow on those cards. If I'm using above 30% of that credit every month consistently, even if I pay the balance to 0, but I'm using more than $15,000.
It's when they look in.
It's when they look in. Then that hurts me.
Right.
And then the lower I go, the more it helps me. So myfico.com did a study about 2 years ago now, and they said that the average for people who had the highest credit score of 780 or above, the average lender or borrower actually had between around 8 to 10% of a utilization rate. So they found that if you got the utilization rate below 30, it actually could improve your score.
Which is having maybe a few more cards, avoiding department store cards that don't give you a lot of balance or availability, and then every so often increasing what's available to you. I just had Chase say to me, hey, we're willing to do a no inquiry potential increase. You just have to go here by this date. And so I'll plan on doing that later today, just going on, seeing if I get that increase, because the more that's available to me, the better I look as a borrower.
And people don't really realize you can always ask for it too. You don't have to wait for them to approach you. You can call them up. Once again, as we talked in an earlier video on credit, right, and credit cards, and we said call or to renegotiate your loans. Well, you can do the same thing on the credit limit. Call the credit card companies. Don't speak to the first person that answers. They don't have the ability to make anything, and say, I want you to increase my credit limit without pulling my credit score.
Yeah.
And you'd be shocked how often they'll do that for you.
I did that when I used to like American Express. Express, my nemesis. They someone still $13,000 on American Express, and then we got in a battle back and forth of whether it was fraudulent or not. It was during 2008. So that's neither here nor there, but they would just constantly increase. I had 6 figures worth as time went on available before I had a little dispute with them, and had a little battle. So yeah, and then they work with Delta, and I fly Delta all the time. So these are the real problems that I'm facing here, ladies and gentlemen. I mean, I know everybody, feels bad for me here with these problems, but you want to have, if you're at 780 or above, I wouldn't go get more credit cards.
Nope.
And if you have a department store card, I wouldn't cancel that. I might cut it up and never use it again, but you don't want to lose that credit history.
Yeah.
When I was really in my early 20s or late teens, I actually went and put myself on some of my mom's credit cards that had history that weren't before my time, right? But it actually boosted my score. They ended up fixing that system. So I realized, oh my gosh, I can get her credit history, which is impeccable, and that helped me get ahead of the game. So you can always look for some of these hacks. They usually find them and close them up a little bit.
They do. They're very good at that. And the utilization rate used to be something that you could fix monthly. So if this month I did have a really high utilization because there was an emergency in my family or an investment for my business, and I maxed out my credit cards, and they happened to look in and see like 100% utilization rate, I could pay those down to 0, try not to put anything on them or very little on them the next month, and then look back in and it would lower right back down. It was around June of 2016, they turned it into, they're now looking at a 2-year average on your utilization rate.
2-year average. Okay, so here's the thing you got to watch for, because there's a lot of errors, and errors have a big impact on your credit. If they don't show what's available to you on your lines of credit or your credit cards, and you go charge $2,000, and it should be you're only at 20% utilization, 80% unutilized, it might look like you're maxed out because they're not reporting that limit. That's one of the sneaky things to look for on the error side.
Absolutely, and you get to dispute that. And when you dispute that, just keep one other thing in mind on disputes. If you do the online disputes, which is really common, they'll say, hey, if you want to dispute, click here. And then there's that I agree to these terms and conditions thing that none of us ever read because it would take our entire life to read it. When you click I agree, you typically are giving away some of your rights that you get through the Fair Credit Reporting Act. So I'd recommend, especially on the important things that are really going to have a big impact on your score, going the old-fashioned way and actually writing the letter and sending it through snail mail.
Certified mail. Certified. And don't debate more than 3 things at a time. It's then seen as frivolous. So look at utilization rate. Keep it under 20% by either increasing those limits over time or having additional cards. Limit your inquiries when someone else is checking into your credit. And what are some other things that we want people to do?
You'll see a lot of, they say that credit fraud is the fastest growing reported crime. And they always say reported crime because what they found is it's usually not actual credit fraud. It's usually them combining your record with someone else's.
So it's an error.
It's an error from the bureau or the algorithm, right? Mm-hmm. When they go in to pull your credit and you say, hey, I want my credit today, the algorithm or the computer program goes in and says, this isn't Garrett, this isn't Garrett, this isn't Garrett, and what's left is what they can't prove isn't you. So if you have someone with similar addresses, similar names, similar birth date, similar social security number, 5 digits that are similar, even out of order, can sometimes trigger this to happen to you. So sometimes you'll see something like, oh man, this guy opened a card in my name, and what happened was he didn't open a card in your name. They just couldn't prove that that person wasn't you, and so they combined it with yours.
Right.
So you'll see that, and you can dispute that as well.
And you're almost certain to have an error on your report if you have the same name as someone else in your family. You're a junior, a third, or anything like that. A lot of times those things will get merged. So you want to look and see, is your name accurate across all 3 bureaus? Experian, Equifax, and TransUnion. So when you're looking at this, at least annually, then you're looking at, do they have the right address? Because these kind of things matter, and one measly point can be a big difference when you're getting a mortgage. It could be the difference between having to buy down a rate with thousands of dollars or not, right? Even though it's the same loan and you're the same borrower, it's just how these things are reported. So,
and the loan costs go up drastically based on that too, what you actually get charged in fees up front based on your credit score. So
an installment loan can help your score too, like a car loan that you pay on time and eventually pay off. That could boost your score. That would be another thing that could be done. So look for errors, look at your utilization rate, continue to increase what's available to you, limit the number of people checking in, look at this regularly on your own, make sure there's nothing that doesn't belong to you, dispute no more than 3 things at a time, and if there is something that's way past due or from your past, don't just pay it off, get a letter of deletion first, get them to agree they're going to delete it when you pay it off so it doesn't bring it current and actually harm your score. That seems like the craziest thing to me.
It is, and it's the worst thing that happened to people too. And you'll find some other things in the real estate meltdown. I had a real estate company, so I didn't escape that completely clean. There was a foreclosure on my record. The foreclosure notice and everything that I got from them said the foreclosure happened in 2010. They didn't report the finalization of the foreclosure until 2018. That's 3 more years that would have negatively impacted my credit had I not gone in and disputed that and cleaned that up.
Right.
So there's errors, there's things that you can do, and you've got to just kind of, you said, be proactive. Look at your credit at least once per year from each bureau.
Can you use someone else's credit history to improve yours? What happens if you've signed for someone else to get approved for something and they miss a payment? These are the things that we're going to talk about right now. All right. There's like credit hacks, but some of them don't work any longer.
I feel like there's a hack for everything in life these days, don't you think?
Sometimes the hacks are a lot harder than just doing the real thing.
You
ever notice that?
Biohacks?
Yeah, like sometimes I'm like, I'll just work out. You know?
Everybody's looking for a shortcut.
I'm friends with a lot of people that know the deep hacks, and it's like, but these guys are in health. They're in like, it's like, okay, yeah, you could do that, or
enjoy your life.
Yeah, they're beastly. They're good. I just don't want to do them.
Part of me wonders, like, what if I just dedicated a year in my life to do all the biohacks and just felt what it would experience what it would feel like.
Like, here's
just
the 5,
for a day to be
okay.
like in the best shape of my life, to be the sharpest mind, to be the most creative.
Let me give them to you, okay? Number 1,
okay,
lots of water.
Got it.
Number 2, lots of sleep.
Not so well, but I'm working on it.
No. 3, movement, like get out and walk, right?
Done.
Sunshine. Number
Got
4,
it.
right?
Jeez.
But not too much because you get cancer or something.
H spots.
And 5, limit your stress. Spend more time in a parasympathetic state versus a sympathetic state.
Yeah.
There's my 5 hacks of health.
Okay. Was that I had 4 out of the 5 maybe?
Yeah, you said sleep.
Yeah, I'm working on it.
Do I bring stress to your life?
No, not very much.
Okay, just sometimes.
I think I add more stress to my own life by my own doing. Okay, here we go. Rachel's question.
Okay.
All right. She says, I'm 26. I started working on building my credit a couple of years ago. To help, my dad added me to his Sears credit line because he has good credit.
Yeah, it's an old credit line if it's Sears.
I know. My mom loves Sears. Tires, every lawn
I
equipment.
bought my grandma earrings at Sears once.
Whoa,
so those
so
were
fancy.
quality. Yeah.
You could get everything at Sears. Washers, dryers, beds, clothes,
And now, nothing. At least not the Sears here.
Yeah, I don't think they're around anymore. Okay. Since then, I've acquired 2 credit cards from my bank and a Victoria's Secret credit card. My credit has dramatically improved, and I'm currently at 730.
Nice.
My dad, for the first time ever, missed a payment on his Sears card, which showed on my Credit Karma account. In addition, because of his late payment, his limit on the account also lowered, and causing a utilization percentage he used to rise. So I'm really good at making sure I only utilize 7 to 10% of my credit limit, but I'm not sure that my dad is as strict with his limits the way I am. Should I get off my dad's Sears account?
Yep.
If so, how exactly do I do that? Thanks so much for all of your knowledge you share. It's done so much for me.
Yeah. Go to wealthfactory.com/credit. There's some really cool resources there. But I once used my mom's credit history because she's really responsible and she had a much longer history than me, right? I didn't go on one of her cards that was around before I was born, but it actually did boost my credit score. But that's a hack that doesn't really work anymore. They've figured that out.
Yeah.
They figured out, oh, people are doing this to improve their score, to show a history that really wasn't their history.
Yeah.
They're entering that history later on. So, the utilization that she's talking of 7 to 10% means that on her lines of credit, which are typically credit cards, using only 10% of what's available. So if it's $10,000, using $1,000 or less. So when you stay under 20%, that's ideal, maybe even up to 30%. Having a few credit cards is great. I avoid department store cards because usually they have very limited amounts that you can get. You want the highest limits available for credit utilization and depth. Preferably don't use them at all if you have a hard time using them and end up owing money the next month. So this is kind of use and pay off, which not everybody does a good job with. Yeah. So get off her dad's. I definitely recommend that. Let's see. What else would we recommend here? Ways to improve and handle credit. Limit your inquiries. So there's hard inquiries and soft inquiries. Soft is you're looking at your credit. No problem. You can do that as often. She mentioned Credit Karma. Hard inquiry is someone else is looking at your credit to get a car, a bank account, or something like that. You want to limit those. Utilization rate, we've already talked about. An installment loan can actually help your credit score. An installment loan is like a car loan. If you're paying it on time, it's a fixed period of time. By actually having one, you can boost your credit score. Errors really hurt your credit score. So eliminate errors any chance you can. So you want to write in, certified mail. Just look at your credit reports. Is there something that doesn't belong to you? Are they not reporting what your limits really are? So it looks like you've maxed those out. Those are just a few of the kind of components that way. And then consistent address makes a difference. So if you're moving too often, that could hurt your credit score. So sometimes I recommend just getting a P.O. box and then having stuff sent there. Do they still have P.O. boxes? I don't even pay attention anymore.
I think they do at the post office.
I used to have a safety deposit box at the bank. Lost the key to it. Fortunately, there's nothing of value. And there was back before the cloud, I was taking, an inventory in my home in case we ever had an insurance claim. And so I kept it there. But yeah.
Where do people put stuff now that,
I have a safe.
In your house?
There's a safe over there. Yeah. And someone could just pick up and leave with.
So super secure is what you're saying.
Super secure. Yeah. It's out here. There's a handgun in there. So if anything happens when we're in the main place, I got to come out here. We're done. There's no protection to that at this point. So
just having it there, it makes you feel good.
We thought
right?
someone was in our house one night. It was I think it was like a sonic boom went off and it shook the window. So it sounded like someone was in. I'm like, the gun's downstairs. We're upstairs. Look, it's in a safe. It's not loaded, not protected at all right now.
Is it just the thought that having it makes you feel safe?
I don't feel safe because I took my wife to the shooting range for date night once and everything was hit perfectly on that paper when they brought it back. They're like, oh, you're really precise. I'm like, just so everybody knows if something ever happens to me and it doesn't look like it was my wife that did it, it was for sure her. Every time we watch one of those murder movies, she's like, oh, if they would have done this, they would have got away with it. I'm like, it's scary that you know this much about it. I don't ever think about those things. So anyway, helping with credit and solving crimes all in the same episode. And even this is health hacks.
Double feature.
Yeah. Anything else, Stelva, that we need to cover here?
Well, I'm just wondering, Credit Karma seems like a very common, place. But what are some other places or companies that people can utilize to?
Yeah, you can look at your credit score with annual credit report. I remember recommending one like True Credit and people didn't like it. You could go to myfico.com and you can get a more accurate report. But here's the deal. You're never going to get the same score as the actual person that's checking your credit. They're always different. You're looking to improve your report, not just your score. Okay.
Okay.
Make sure your report's clean. And if you really focus on the report overall with some of the strategies that I just talked about, that'll be helpful. You know, one person might show you as a 760, another one might show you as a 790, another one might show you as a 720. Even when you pull up all three bureaus, you're probably not going to have the same score on any of those bureaus. So just keep the report as clean as you can.
It seems like there are so many variables that go into our credit scores that there's so much to manage and like keep track of. And know about.
Not as much. I mean, not as much as you would think. I mean, errors, big one. Utilization rate, big one. Installment loan to help you out, that's helpful. You know, inquiries, another one. Paying on time, that's kind of the obvious one. So I read a book years ago called 7 Steps to 720 by my buddy Phil Tyrone. It was super simple. So we certified in that, and then, you know, we filmed this thing at wealthfactory.com/credit, where I brought on credit experts, because I'm not like any certification in credit. I just kind of know the basics around it and kind of help people navigate it. But those guys do a really good job, and that's a free resource.
Amanda, how are you doing today?
I'm doing great. Okay, so we have several questions that have come in from people in regards to credit score. So I think we should just dive into that.
Okay, great.
The first question is, who are the legitimate companies that provide personal loans to people with very poor credit?
Yeah, with very poor credit, let's first talk about how to improve your credit to kind of help that out. And so as far as acquiring loans, I call it the 4 C's. So one would be having the right credit score, which I'll go over those strategies. Second is the right collateral. So obviously if you have like a car loan or a mortgage, that could be easier to get than an unsecured line of credit when you don't have a good credit. The third is cash flow reporting. So the bank looks at you and says, oh, this is a good borrower. Their financials are in order. And then the last C is the right connection. So obviously that's part of the question is, what are the right institutions out there? And it varies based upon who you are, whether you're a business owner, or I have someone I was working with that lives out in California and owns a vineyard on his 5 acres. Well, there's a different credit union that very specifically finances that versus other banks out there. And where he was struggling to find, how to get this done. Once he found that right credit union, it moved very quickly. So let's talk about the credit score. There's certain basics. Obviously, if you can pay on time, that's going to help out your credit score, but it's only part of it. Another piece of a credit score is your soft inquiries versus your hard inquiries. Hard inquiries are letting other people look into your credit, and if you have too many of those, it can actually dip your credit score. Whereas soft inquiries, anytime you look at your credit score to make sure that you're on track and there's no errors and those types of things, that doesn't impact your score. So limit your hard inquiries. Your utilization rate is the next piece. Utilization rate would be if you have a line of credit, like a home equity line of credit or a credit card. When you charge money on that, when it gets above 20% that's been utilized of what's available to you, it can start to dip your credit score. Even for those people that are paying these off in full, once you get above a certain level, it's when they're looking in, whether it's Experian, Equifax, or TransUnion, when they're looking in and go, oh, here's a balance, that could impact. So you want to increase your lines of credit, or you want to make sure to have multiple so you don't use more than 20 or 30%. Now, the next piece is very common, and it's having errors. Errors on your credit report are going to impact you. So that could be everything from your name being spelled wrong, to your address being different from one bureau to the next, to having things on your credit that aren't actually yours, or having past things that didn't get paid because maybe you didn't transfer the utilities or cancel them when you moved out. Maybe this is clear back from when you're in college, depending on your age. So you want to look for those errors and never debate more than 3 at a time. If you debate more than 3 at a time, it can be seen as frivolous. And when you do debate those errors, make sure you're using certified mail, or if you're going into the credit services, which, there's myfico.com, annual credit report, free credit report, Credit Karma. There's plenty of services out there to check on your credit and make sure you're looking at all 3 bureaus. Look for those errors. Don't go for more than 3 at any given time, and make sure to correct those errors over time. These are some of those things that could really help and boost your credit score. And the final piece I'll give you is the installment loan. An installment loan would be like a fixed loan, like a car loan, that if you're paying on time, can actually boost your credit score. It's not a line of credit where you can go borrow more. Once you borrow it, it just starts to go down in the balance, and that actually can help your credit score. So the installment loan, utilization rate, looking for errors, limiting your hard inquiries, and paying on time. Those are 5 really basic things that can help you out with your credit score. And if you get that improved, then you can go out there and search for the best companies.
There's a lot of reputable companies out there, a lot of big banks that you might want to work with, and even ask them what it's going to require in order for you to get a loan. I found for people that have good credit, James at lendbase.com has been pretty good for business owners getting loans. But it's such a, go back and ask my nerds, ask more specific questions, and I'll give you a general response.
Yeah, that's great. So you actually answered two questions in one there. So you got a couple of companies, and the second question was from Tom on how do I increase my credit score. So I think you gave some really applicable things that Tom can go implement right now to improve his score. The last one that we have comes from Margaret, and she says, does it affect your credit when you transfer your existing credit card balance to a lower interest credit card?
Okay, so a balance transfer, that could impact your credit from this standpoint. Number one is how much of a utilization do you have on your current card moving to the other? Are they going to give you the same balance? Is it going to be maxed out on the transfer? Or are they going to have more room for you to continue charging? The second thing is they're typically going to do a hard inquiry to check on your credit before you do that balance transfer. So if you did it once, it might have a negligible impact unless it was totally maxed out when you moved it over. If you did that on a frequent basis, which some people play that game, there's more hard inquiries and there's more chance that it's maxing out what's available to you every time you do a balance transfer. So those would be the two things I would look for first. Is are they going to do this without looking into your credit, and how much is going to be available to you after you transfer, or is it going to max out that balance transfer?
I have a question. I think a lot of times when people go to buy homes or assets, they're looking at their credit score. Also, if they're business owners, it seems to be at the forefront of their mind. But if someone isn't buying a house, how important is it for them to monitor their credit score and keep track of that, whether they're a college student or a young adult starting out?
I think it's important for a couple reasons. Number one, your insurance rates are somewhat predicated upon your credit score. So if you have a car and you're getting car insurance, or you're renting a home and you get renter's insurance, or you're buying a home and you have homeowner's insurance, they actually look at your credit score as part of the indicator for what kind of rates you're going to get. The other thing is, if you have a good credit score, then you go to make that purchase, you're likely to get better interest rates. So you might not be buying it right now, but by keeping that up, that's going to give you purchasing power in the future, where if you neglect it, don't worry about it, and there are issues, and then you go to get it, and there's this issue show up, it might be the difference between paying a lot more for the same loan or getting denied on that loan.
So, and another thing, one of the apps that my youngest brother has been using is Credit Karma. And so maybe talk about what is a cold inquiry and what is not, and maybe how those apps help you develop a good credit score.
Two of the credit experts on our Money Nerds team are Ryan O'Shea and Dale Clark. And I know that Dale in particular recommends Credit Karma as a very inexpensive way. I think there's free features to it as well to kind of monitor your credit score. So when you look at your score, that's a soft inquiry that's not going to change your score. It's when you have other institutions. Like when I went to buy my first car, I think I walked in and they're like, who's this long-haired hippie? I still had long hair back then, but it was more of a Kurt Cobain phase where I had like the bleach blonde. I even had earrings that were hoops that my parents were heavily disappointed in. And as I went in, I think they're like, can this guy afford the car that he's buying? And every place I went looked at my credit score, and that was 3 different places over a couple of weeks, and that lowered that score because of those inquiries. If you have more than 1 to 2 hard inquiries a year, then that can impact your credit score. So if you're setting up a bank account at an already established place that maybe it's a second account because you're setting up a business account or you're setting up a savings account, ask if they can just look at your existing account and not check your credit score, because those would be hard inquiries. Or when you're going to buy a car, don't let them check your credit until you know for certain you're buying it. And if you're borrowing, then obviously they're checking it. But I personally like to pay cash for cars at this stage of my life, although I borrowed for the first car that I bought.
Yeah. So what is the sweet spot for a credit score? Because one of the individuals who wrote in with a question, his current credit score is a 480. Yeah,
so 480 is going to be quite low. I mean, when you get into the 680 range, it really opens up a lot of possibility. 720 used to kind of be the magic score. And depending on who you talk to, I hear 760 to 780 is really the main score. If you're in the 800s, you're just bragging at that point, but 760 to 780 is really useful. 720, 680. The 680 is useful as well, but you just might not get quite the good interest rates or as good of interest rates.
Want to master your money? Want to figure out the things that you could do to improve your finances? Click here and check out more videos like this on Money Matters.